Most people grow up believing that credit cards are a symbol of financial progress, a modern convenience, or even a reward for being responsible adults, something that makes life easier and more stylish. Because with one simple swipe, you can buy now, pay later, collect points, unlock discounts, earn cash back, travel for free, stay in hotels you never paid for directly, and feel like you are outsmarting the system. But what almost nobody pauses to question is why banks are so eager to give these cards to millions of people, why they promote them so aggressively in malls, online ads, phone calls, and even on the streets, and why an industry built entirely around lending money would ever offer anything that genuinely benefits you without expecting far more in return. Because the uncomfortable reality is that the credit card system is not designed to help you save, grow wealth, or gain freedom. It is engineered to shape your behavior, influence your spending habits, and quietly extract profit from you in ways that feel harmless, smooth, and invisible. And to understand this, you first have to understand how credit cards actually work at their core. Because unlike debit cards, which simply allow you to access your own money directly from your bank account, credit cards allow you to access the bank's money, meaning every swipe is not a payment, but a short-term loan, a promise that you will repay what you borrowed later. And while that difference may sound small, it completely changes the psychology of spending. Because when you use a debit card or cash, you feel the loss immediately as your balance goes down. But when you use a credit card, nothing seems to change. Your bank balance stays the same, your lifestyle remains untouched, and the cost is pushed into the future, creating a dangerous disconnect between spending and consequence. Which is why banks love credit cards so much, because they turn real money into an abstract concept, and abstraction makes people careless. And when you receive a credit card, it comes with a credit limit, which sounds like a privilege, but is actually a calculated risk threshold determined by how much the bank believes it can safely lend to you while still making money. And the more you use the card and repay it, the more the bank may increase that limit, not because they trust you as a person, but because higher limits statistically lead to higher spending, and higher spending increases the chances that you will eventually carry a balance, miss a full payment, or fall into the interest cycle that generates massive profits for lenders. And this is where the so-called interest-free period becomes one of the smartest traps ever created in modern finance. Because on the surface, it looks fair, even generous, as the bank tells you that if you repay what you borrowed within a certain time window, usually 30 to 45 days, you won't be charged any interest at all, which makes many people believe that credit cards are basically free money if you're disciplined. But what they don't emphasize is how human behavior actually works, because every month your credit card statement shows you two numbers, the total balance you owe and the minimum payment required to stay in good standing. And while the full balance might be intimidating, the minimum payment looks small, harmless, and manageable, sometimes as little as a few dollars. And as long as you pay that minimum on time, nothing bad seems to happen. No late fees, no angry calls, no immediate punishment. But what really happens is far worse, because the remaining balance quietly rolls over into the next month. Interest starts accumulating on top of it, and from that point onward, the clock is working against you, because credit card interest rates are among the highest in the financial system, often exceeding 20% annually, meaning that the longer you take to repay, the more money you lose without realizing it. And this is not a rare mistake made by careless people. It is a widespread pattern, which is why entire countries are drowning in credit card debt, with trillions locked into revolving balances that generate consistent, predictable income for banks year after year. And even people who believe they are responsible often underestimate how easy it is to slip into this cycle, because life happens, unexpected expenses appear, income fluctuates, and suddenly paying the full balance feels inconvenient, so the minimum payment becomes the default. And once that habit forms, breaking free becomes incredibly difficult. And even for those who proudly say they always pay their balance in full and never pay interest, the system still finds ways to profit, because many credit cards charge annual fees simply for existing, especially premium cards that promise better rewards, higher limits, and exclusive benefits. And these fees are due whether you swipe the card once or not at all, turning your wallet into a subscription service for the banking industry. And the more prestigious the card looks, the higher the cost of keeping it, creating a hierarchy of status symbols that feel rewarding but are carefully priced to ensure profitability. And then come the rewards, the most powerful psychological weapon in the credit card system, because cashback, points, miles, and perks create the illusion that spending is productive, that buying more somehow brings you closer to free travel, luxury experiences, or savings. But these rewards are never free. They are calculated incentives designed to increase transaction volume, because banks earn money every time you swipe, not just from interest, but also from interchange fees paid by merchants. And to cover those fees, businesses often raise prices slightly, meaning everyone pays more, including people who never use credit cards, effectively subsidizing the rewards of cardholders. And when you look closely at the math, the illusion becomes obvious, because earning 1 or 2% cash back sounds appealing until you realize that you must spend hundreds or thousands just to earn a few dollars back. And airline points are even more deceptive, because a single domestic flight can require tens of thousands of points, while international trips often require far more, meaning you would need to spend enormous amounts or actively chase bonuses like a side job just to unlock what is marketed as a free benefit. And studies consistently show that people spend more when using credit cards compared to cash, not because they are careless, but because delayed payment reduces emotional pain, making purchases feel lighter and less real. And this increased spending easily outweighs any rewards earned, turning the promise of savings into a driver of consumption. And layered on top of all this is the credit score, a single number that quietly governs your financial freedom, influencing whether you can borrow money, rent a home, buy a car, get insurance at a reasonable rate, or sometimes even secure employment. And while credit scores are presented as neutral measures of trustworthiness, they are deeply tied to borrowing behavior, meaning that to improve your score, you are encouraged to use credit, repay it, and repeat the cycle, which is why credit cards are often portrayed as essential tools for building credit credibility. And while this is partly true, it creates a subtle form of dependence, because people start believing constant borrowing is necessary to prove responsibility, leading them to swipe even when they don't need to, not to improve their lives, but to satisfy an algorithm. And this is where many people lose control, confusing financial activity with financial progress and thinking that more transactions equal more stability, when in reality, true financial strength comes from having options, savings, and low dependence on debt. And when people point out that wealthy individuals also use credit cards, they miss the most important distinction, because the rich do not use credit cards to survive or fund lifestyles they cannot afford. They use them strategically, often for convenience, tracking, or short-term cash flow management, while maintaining the ability to repay instantly without stress. And for the average person, copying the behavior without the underlying financial discipline and resources leads to the opposite outcome, increasing risk instead of control, which is why borrowing should never be an everyday habit unless you fully understand how debt works as a tool rather than a crutch. And if someone chooses to use a credit card, the rules must be strict and simple. Spend only on essentials, stay well below the limit, avoid emotional or impulse purchases, repay the full balance every single month, and choose cards without unnecessary fees rather than chasing flashy perks. because credit cards are not inherently evil, but they are not neutral either. They are products designed to influence behavior in ways that favor the issuer. And once you see how aggressively they are marketed, how carefully the incentives are structured, and how profitable the system is despite offering rewards, it becomes clear that generosity has nothing to do with it, because no institution gives away free money at scale without extracting far more in return. And the real danger of credit cards is not just debt, but complacency, the slow normalization of spending tomorrow's income today, the illusion of affordability, and the quiet erosion of financial awareness, which is why understanding the system matters far more than memorizing tips, because once you see the game clearly, you stop mistaking bait for benefits, and you regain the ability to decide when borrowing serves you and when it serves the bank.